Hi everyone, I'm Jeff Yasteen, Investment Director here at Banyan Hill Publishing, and we have Paul Mampilly, the editor of our newsletter, Profits Unlimited, on the line via Skype. Paul, welcome.
Thanks, Jeff. Great to chat with you.
And we first published the monthly edition of Profits Unlimited in June 2016, Paul. And since then, it's developed quite a portfolio of stock picks and your going upness system. So briefly, tell us first, how did you learn to find stocks that go up? And what is it about your background that helps you accomplish this?
The key to understanding how to pick stocks that go up is to ultimately actually go and actually invest. You'd be shocked that most people who start out on Wall Street or actually manage money on Wall Street still don't understand why stocks go up. And so I have come through this process through trading on my own, trading a $5 billion hedge fund, helping manage a $25 billion asset management company, and focusing on, well, why does one stock go up after you buy it, and why doesn't another stock go up? And I whittled it down to 6 fundamental points, which really aren't discussed a lot by whether it be the media or people who show up on CNBC, and they focus on value, they focus on the product, they focus on the CEO, they focus on all these kinds of things. But you'll never hear a person actually tell you, well, why is the stock going to go up? And that's because perhaps they don't know. And second, it's actually a very simple thing, which is that somebody comes and is willing to pay a higher price for the stock today versus yesterday, and somebody is willing to come and pay an even higher price the day after and the day after and a whole sequence of that. And there's only one reason why someone would do that. It's because they believe that the value of that business is growing.
Paul, tell us where you worked at on Wall Street and when.
My very first Wall Street job was really in the back office. And that was useful in its own way because I got a sense of how the plumbing of Wall Street works. And if you don't have an understanding of the plumbing of how Wall Street works, how money flows around into different places, then it doesn't really give you a whole picture of it. So I started in 1991 at a company called Bankers Trust. And from there, Bankers Trust was bought by an even larger company, a global bank called Deutsche Bank. I was with them while that happened, and that gave me my first big break into asset management and managing money. I was at Deutsche Bank until 2001. From there, I went to another European asset management company called ING, which is no longer around in the United States. They are still there in Europe. And from there, I actually went and took a break from Wall Street for a few years. And then I went to work for a boutique asset management company where when we joined, I believed we had something like probably $5 billion under management. And by the time we left, we had over $25 billion.
Paul, some people might ask, why aren't you still working at a hedge fund? Why write an investment newsletter like Profits Unlimited instead?
Truthfully, when I chose to leave New York, people told me I was mad and I was crazy, but I got tired of living in New York. If you've lived in New York, I lived in New York for almost 16 years. It's a brutal day-to-day existence, getting on the subway. We didn't have great supermarkets at the time. I had children. Schools are terrible. And I was tired of living in New York. And when I left, I was also tired of being on Wall Street. And the 2008 financial crisis really did tell me that there's something wrong with the incentives of Wall Street, which is that the fees that are collected by hedge funds, the asset management companies, they kept all that, while the people who had their money in mutual funds, which are regular people, well, they lost their money permanently. And I didn't want to keep living my life as if I didn't recognize that. And at some point, I just thought, well, I'm very good at what I do. How should I go about in the future doing it? Should I continue to work for people that already have an enormous amount of money and make them wealthier? Or I could do something that has never really been done. I could take my expertise, take my knowledge, and try to make regular people rich.
Paul, what would you say is the most valuable experience that you took from your time as a hedge fund manager?
The most valuable thing that I've learned is something really simple, which is that the way to make money on Wall Street is to focus on the simplest part of it, which is that it is a market. And by that, I mean, when people think about stocks, they seem to just simply forget the common sense that they would show when they go into a supermarket, or they would go into a vegetable market. And now suddenly they put on this crazy hat on and they forget all the simple things, which is that you want to buy the things that are going up. That's the reason. That's just like if you went to the vegetable market, you want to buy apples that taste good. And that's the thing that I've taken the most out of, and it's taken the most time, because I have a MBA, I have a CFA, I've done all that stuff. But when it really came down to it, it's the simplest thing that really helps me pick the stocks that go up.
Well, tell me this, why is Profits Unlimited a good value for subscribers?
Well, when I compare it to how much I used to charge when I worked on Wall Street, it's preposterously cheap. Frankly, if we charged $1,000 for it, it would still be an incredible value. Personally, I believe if we charged $5,000 for it, it would be an incredible value. At my previous asset management company, we wrote research and we charged $50,000 a year. They were institutional buyers, but people were happy to pay for it because the value of the research was so high. Obviously, Profits Unlimited, we charge $95 or something in that range. I keep track of the pricing, so it's incredible value. The performance of Profits Unlimited has been incredible. And because I know my going upness system works, because I've used it for myself, I've used it for clients in the past, readers who follow along are going to make money. And so as long as readers feel like they are willing to follow along with what I'm willing to tell them, then it's going to be incredible value for them. Because ultimately, even if they pay $95 or $100, $150 or $1,000, if you don't use the advice, ultimately, it's of no use. So the other great value to Profits Unlimited has to do with when we've started it, which is we are in the beginning of these two incredible trends, mega trends. One is the Internet of Things, which essentially brings the Internet into the entire world. It puts it into cars, bridges, roads, houses, and is going to generate incredible wealth. And the second is the coming of age of these 92 million Americans in the United States called millennial generation, comparable to the baby boomers. And we've done incredible research to show that when a generation comes of age, economies boom. And so we're at the beginning of these two megatrends.
Well, thanks, Paul. And I look forward to chatting with you again. We've been talking with Paul Mampilly, editor of Profits Unlimited.